Hello, welcome to our session today. I'm Sam Seaton, CEO of Money Hub, and it's an open finance platform. And before I get started, maybe I'll just explain a little bit of difference between open banking and open finance. So open banking, I always think of it as one-dimensional, open finance, two-dimensional, open data, utopia, or three-dimensional. Open banking covers current accounts and payment accounts. So that means your credit card and your current account, basically, for consumers. And then you move on to open finance, where we take that a step further. That means property, it means investments, savings accounts, genuinely the next stage of mortgages, liabilities, lending. And then obviously we go on to open data, which is the next level, which is around energy, nectar points, you name it. I mean, we'd hope even Google and Amazon, all that data becoming more open. So today we're here with three experts to really get under the hood of open finance and the power it has for your business and what you're doing. So let me just explain. We've got Jonathan. Jonathan spent time at WorldPay. So what he doesn't know about payments, we should all just kind of leave now, but he's actually moved on from WorldPay to be the innovator in pay. He's actually chairman of One Banks, and he's disrupting with his own business that he's CEO of Modo. So let's hear from Jonathan in the first instance.
Thanks very much, Sam. Hello, everyone. It's great to be here. As Sam said, I've been in financial services now close on 30 years. The first 20 years of that very much in large corporates. And working with WorldPay as part of the turnaround and taking that to IPO. Since then, I've spent all my time with startups and disruptors, and also helping some of the big banks and FIs disrupt the marketplace as well. So I helped to lead NatWest's build of the Pay It payment product, for instance. I'm currently the executive chairman of One Banks. And what One Banks is doing is using the open banking APIs to bring back in-person banking. We're running a number of kiosks currently in Scotland where you can go in and you can use our app and our physical devices and our people sitting at the kiosks to access any bank account from any bank that uses the open banking APIs. And pay in cash and take out cash and get a variety of services. So what we're really trying to do is to bring that physical aspect into, and I don't know whether this counts in your definition of open finance, Sam, but it's kind of bringing a physical aspect and all the services and all that face-to-face to a digital and increasingly digital world.
Brilliant. Well, I think it does count because we've got to have these hybrid models for many a year to come, because we all have experienced times when the technology has let us down. So Matt, so good to have you here today, Matt, because part of the CMA9 at Nationwide, but really the exciting part is you had to build the open banking infrastructure at Nationwide. I mean, from when it first was talked about in terms of the legislation, right through to actually making it real, so making it happen. And what you don't know about that journey, I suspect there's not too many stones that we'll find unturned. And then brilliantly, because obviously you've done such an amazing job of getting that sorted, you've now been able to actually move to the next level really at Nationwide with the fact that you can leverage all of that good work to actually benefit the consumer, the member in your case, so that they can leverage all of this good transformation that's taking place in the digital world. So over to you to tell us a little bit more about that.
Thank you, Sam, for the lovely introduction. Look, I've got a 20-year career in all things digital at Nationwide, and I was first involved in sort of the very first incarnations of internet banking, if you cast your mind back, and then a long history of digital change and innovation right through to 2018 when I got given the development opportunity, should we call it, of leading open banking, and that was both leading Nationwide's delivery against the regulations that still exist for open banking, but also thinking through how we can leverage this for our members. Nationwide is a building society. That does mean something to us. Every colleague that works in Nationwide, it does mean something to. We are the largest building society in the world. We've got 16 million members. We come from that typical mortgage and savings background, and that's incredibly important to us. And we still see ourselves as a challenger in the world of current accounts. I mean, it's taken 30 plus years since we first entered the current account market to breach through the 10% market share, which shows you how long some of these changes can take. And I think that's in part about certainly over the sort of recent history, subscribing to that digital future, but not at the expense of those members and those segments that want human and face-to-face contact. And a core part of our DNA is that we believe that we need to meet all of their needs, and that they're not necessarily different things. One can complement the other. And I think that is how we approach kind of the big world of open finance. And I'm very keen that as we look forward to what open finance becomes and delivers, that we both learn some of the lessons of the past, but we embrace some of the big opportunities that it has for not just finance, but also the UK economy.
Yeah, no, I agree. And Paul, lucky last there. Just wanted to bring Paul into the table because Paul comes from a slightly different background, much more focused on really delivering solutions or solving problems for consumers, for people like you and me. So having a background from Aviva, the workplace, general insurance, so right through to recently employee benefit consulting at Mercer's. What Paul brings to the table is a wealth of experience about, in effect, using this digital transformation and the legislation that we've had, but actually taking it to market and using it for good, using it to help people be better off, see their money, get better clarity, and dare I say it, with the open finance element, bringing the pension into the fold to try and get people to understand the here and now and the future. So with that, Paul, let's have a bit more detail on that.
Thanks, Sam. So, as you said, the last few years has been spent at Mercer, primarily focused on trying to solve a consumer problem, which is why do people not engage with their retirement savings? And retirement savings for most people is something that's confusing. It's getting more confusing as people have more and more jobs. And we were just trying to make sure that we could help people understand what they've got and what they could do about it. But to do that, we needed to think completely different. So traditional retirement is focused on, I'm a member of a pension. I get correspondence from that pension every year. I don't understand what it says. It's a big pile of paper. I put it in the shoebox with all the other pension paperwork and I put it under the bed. And then when I get to retirement, I pull all the paperwork out and I'm still confused. And so we started to do some research with customers. Now, bearing in mind, globally, Mercer looks after the health, wealth and career of about 110 million people. And in the UK, it looks after the pensions of about 7 million. So it's an awful lot of people. And the problem we were trying to solve was, how can we help them understand what they've got, what they can do about it? And to do that, we needed to understand them as individuals. So we started by looking at financial well-being and where did pensions sit in the financial well-being spectrum? And then to really then help people think short, medium, and long term, you've got to put pensions in the context of their overall finances, because until you do that, all they'll think of is pensions, cash, investments, savings, current account. And just thinking in that siloed approach just wasn't helping people. So that was largely what we were doing. We moved engagement levels in pensions from around 10% to over 60% for the segment that we started with. So it was incredibly successful using open finance. But we knew at that time we'd only just scratched the surface. And for me personally, the journey just opened my eyes to the potential of open finance and what we could do with it for consumers. So that led me just last week to actually join MoneyHub to help MoneyHub and our industry really exploit the potential of open finance. So really excited about the future of it.
It's brilliant, yeah. And I mean, equally, as the CEO of MoneyHub, I can officially welcome Paul on board, right? Because this is the first thing that you've done with the MoneyHub hat on. So moving on, let's crack on, because we want to cover a couple of the questions in a bit more detail. And Bill Gates once said that we need banking, but we don't need banks anymore. And for all of you out there that are listening, that are working for a building society or a mutual or a bank, you're going to hate it when you hear that. I actually agree with him. I think where the world is heading is that, if we're not careful, the banks will become utilities. And they don't need to be, but it is where banking's heading, because for most people, money is just an enabler. So with that in mind, what do you think, to the panel, to all of you, do you think that organisations understand how they can use open banking payments in their propositions to potentially stop this shift to being a utility? So coming to you, Jonathan, first. I mean, let's start with Jonathan. It'd be great to get your thoughts on this.
Of course. And at the risk of being slightly controversial, I actually fundamentally disagree with Bill Gates. Apparently he's quite a smart guy, but I don't think he actually understands what a bank is and how to think about a network of financial services. And someone has to take the risk, and someone has to ultimately be that custodian of trust, which is the way I think about risk, for the consumer. And that's what a bank, very broadly, and what a building society does, is they are that custodian of trust for their end customer. But he is right, and I completely agree with you, Sam, that you end up, if you don't really think about what you do in the terms of your customer and the broadest possible definition of your customer, you will just end up being commoditized. You will just end up at the back of a long chain of technology and services, and really being able to add no value. So at One Banks, what we're really trying to do is to help banks and financial institutions have that lens of, they've got a bunch of customers out there that, they are at risk of not servicing. They are at risk of just leaving them. And our founder and CEO, Duncan Coburn, he lives in Scotland, and he sees a lot of communities that don't have any banking services, no financial institution in them. And that's what led us to set up our first kiosk in Denny. That's had no financial institution in the town for 2 years, and 2 others in towns nearby. Because it's that physicality, it's that being able to go and talk to someone. I was reading a fascinating study on I think from Lloyd's, the digital engagement study, where something like 40% of population, so over 20 million people, are low or very low digital engagement. But what really struck me about even in the very low digital engagement sector was something like 60% of them were still confident using digital services and the internet, but just preferred to do their banking face to face. So I think this is the key thing for me. A financial institution will get marginalized and will get pushed to the back if it doesn't really step up to that idea of, it's the custodian of trust for its customers, and it has to reach out for its customers and be there both physically and digitally to continue to be relevant.
Yeah, I mean, I think you are right on the money there, Jonathan, with the trust, because if you look at the World Economic Forum for this year and last year, that is what dominated the entire discussion, was trust, and that really the new currency for businesses to survive and thrive from their output is all about trust, not crypto, but trust. So Matt, coming on to you, what do you think about what Bill Gates said?
I mean, firstly, I'd probably respectfully remind him that we're not a bank, we're a building society. I'd get that out of the way. I'd probably then remind him of another quote that I think is attributed to Bill Gates, which is around everybody overestimating the amount of change they'll see in the next 5 years, but underestimating the amount of change in the next 10. When you look across, the needs of our members, think about the big things that matter, and these are on the regulator's agenda as well: access to cash, maintaining branch footprints, human service, and the need for quality human service and trust in organizations doesn't go away. And I subscribe to everything that was just said, actually. However, that isn't necessarily an opposite of having a really strong credible digital proposition, and we also need to make sure that we can leverage modern open data digital technologies to meet the needs of what our members are asking for. And then I would think that the key point here is, in that future, it really matters what we're doing to meet our members' needs, right? Because we can talk, and we've talked for years around the disruptive impact and potential of open banking and how it's going to transform the industry. And I do believe it will be transformative, but it hasn't yet. And we can talk about, well, should we talk and communicate more to our members about open banking? But they don't care what open banking is. Why would they? They just care whether we're meeting their needs and whether there's something valuable in it for them. And when there are services that meet their needs from one provider to another one, then, well, consumers and our members typically will, vote with their business, and they'll take their business and their money where they think it's best served. So I don't subscribe to a future whereby, building societies or banks don't exist. I think it will be transformative, and we'll see certain shifts in the marketplace, and we'll see increased partnering with different organizations and different fintechs that specialize in certain services. And I think that's a wholly positive future. But those that will thrive in that future will be those organizations that can balance human and digital service and maintain trust and security at the heart of it. And finally, just to add, we talk to our members regularly at AGMs, and the overwhelming theme that comes back when if you mention open banking is we don't want it to be open, we want it to be secure, and so there is a real at its core issue of trust that needs to be at the center of everything we do, but it will be value led and proposition led.
I completely agree. You're spot on, because you've only got to look at really, let's take retail shopping. There was always that tension, I'm sure. I mean, it's not, I often think about this, in the boardrooms of, 2005, 2006, when there was all this money being spent on, the development of online propositions, which, maybe 2 people a week bought, a belt or, I don't know, a top from. And then you've got all the, the actual retail shops themselves, saying, but we need more money, effort, staff, for, to service the customers that love coming into the shops. And so it's ridiculous you're spending all this money on this, very low traffic footprint, because of what you said, Matt. It's, people do love that human interaction, but actually what we're seeing, isn't it, is actually we like both. So we want our cake and we want to eat it too. And actually that puts more pressure on businesses, because we've got to do both now. We've got to give them their cake and let them eat it too. And it's the ones that do both that will, from my perspective, really survive and thrive. So unfortunately, we're going to have to spend a bit of time and effort while that transformation is happening, getting those value propositions right, so that when that shift really does take place, we've still got the balance right as a business, and they're the ones that will be in a great position. So Paul, over to you actually, because to be fair to the business that you were working with, Mercer, did so much work on. I mean, one of the questions: how did you get Mercer to actually spend some time and effort on an area that, if you think about it, is not really related to pensions, is it?
No, it was related to how people think about their money. So, Mercer was a very pension product and legislative and regulatory driven business. Quite rightly so, it's a very complex world. But more and more, part of the Mercer business was working with employers to understand what their workforce would look like today, tomorrow, 5 years, 10 years' time. And it became crystal clear that the average person leaving university was going to have 10, 11 jobs in their lifetime. And that meant 10 or 11 pension pots sat, getting more and more distant from people's today. And so when we talked to individuals and then brought this back into the business, what became clear was individuals don't think in terms of product. They think in terms of today money. Can I survive the day to day? Have I got enough money put aside in case the boiler breaks down or the car breaks down? Have I got the freedom to make some choices? So have I got some money that will allow me to start thinking about saving extra in cash or in ISA, and then on track for the future? So it's kind of those 4 pillars: survive the day to day. Can I survive a shock? Have I got the freedom to make choices? Can I think about the future? And one of the pivotal points for a business like Mercer was when corporate clients were saying, this is what's happening with our people who are having more jobs in their lifetime. What can we do? It then drove more focus into, so if we don't think about individual people, we're not going to be able to be relevant to the employers that are putting benefit packages in places for them. And it brought a whole raft of thinking into, so I'm an individual, what do I need to do? What are the actions I need to take? And Mercer had to get away from being siloed in, say, one retirement product and automatically communicating with people in terms of, it's a pension. The default thing you need to do is pay more into it. Well, when you have data that you can get from Open Finance, all of a sudden you understand that if you've got £30,000 worth of credit card debt, don't pay into a pension. Pay off your credit card debt first. And it was the power of understanding that data that really started a wholesale shift in thinking.
So it's the power of data, really, is what you're saying, which leads on. So I'm sure we've got the audience thinking, well, that's great. So Jonathan, Matt, and Paul, each in your own ways, have been able to do fantastic things. But you mustn't have been constrained by all these legacy systems that a lot of the people in the audience will be thinking. It's all very well. I've got all these great ideas, and probably would love to talk to the three of you a bit more, but feel it's not worth it, because how do they do that with core systems that have no APIs? And actually, AI is something they dream about rather than something they think they can do. So could the three of you give us your views on how you help the audience to almost get to a place where all three of you have got to, which is actually using this technology for good? Jonathan.
If I may, I'd just like to loop back to something in particular. Matt touched on this about how we have digital. It's important to have both digital and physical propositions and wed them together. And I 100% agree with that. But I think it is really important. This is something that kind of I'm fairly passionate about. It's really important that we don't forget about the people who don't have access or don't want to have access to digital propositions. And there is very much still a bundle of services that is, you can have a spectrum, and some of them are weighted towards physical and some of them are weighted towards digital. Many building societies, and Nationwide as well, are very committed to their physical footprint, which is fantastic for all their members. But there is still, particularly of those of us who are working with open banking APIs, and the whole of the One Bank's platform is based on, you having mobile banking, because you have to have mobile banking to use the open banking APIs to access the open finance system. Getting people across that initial hurdle is still something that really concerns me. And 10% of our customers, we've actually got them onto digital banking from nothing in order for them to be able to then use our system and our platform to access much of the rest of the financial system. So I just wanted to kind of sort of say that as maybe as a bit of an endpoint to the previous discussion, if I may. In terms of in terms of the question you actually asked me, there are so many barriers to actually getting this this connectivity to work. Legacy systems and APIs and being able to kind of create that bridge is undoubtedly one of them. The other one, though, that I'm kind of worried about is also the extent to which the APIs, the functionality of the APIs are moving, because I think that's what drives a lot of the very attractive services. It's all very well having basic connectivity for information and payments, but variable recurring payments, which is has been promised for a long time, and is now coming in with a relatively limited remit for sweeping, which is great, but it's still relatively limited. The pace of change of what you can connect to, I think, is probably going to be as limiting potentially over the next sort of year or two as the ability to connect out from your core system in the first instance.
So do you think people should wait?
I think the financial system should be aggravating, if that's not too strong a word, for a broader set of functionality for variable recurring payments to be opened up for just beyond a relatively limited set of sweeping use cases.
So I think genuinely, I think the industry is doing that. But what about for some of the businesses that are listening today that are not sure what to do? So I think the report we had recently from Whitecap on building societies is that 55% thought open finance was something that they could embrace. But obviously that means 45% don't think they can. So, I mean, do they just wait a few more years?
Well, I guess, it depends on what they feel is holding them back. If that's technology, if that's connectivity, there are suppliers out there who are working on that. If it's fundamentally a core systems issue, the big challenge on core systems is always the extent to which you can afford to invest in them and the extent to which you can afford to move away from legacy. There are some great cloud-based core banking systems, and if you were in a position to look at replacement of your core platform, that's a fairly obvious route. But for a lot of small organisations, that's not necessarily practical. So I don't know whether that helps. I think waiting is really hard because, again, as Matt says, people are going to go and search out the proposition that they need, and they'll find the right providers. And with more and more fintechs coming in and offering a wide selection of products, what you just end up with is, as a consumer, fragmenting your financial life across more and more different providers. And I'm not convinced that's a good thing. It's great for competition and choice, but I'm not convinced it's a great thing for an individual consumer.
So Matt, over to you about the cake and eat it too scenario. I mean, and the fact that I'm sure there are a lot of businesses sitting there thinking, well, how do we do this? And I think they will be thinking we have legacy platforms we can't move off. So with you being so experienced at Nationwide, you must have this issue almost for the rest of the business's time, if you like, because it's not possible to have a nationwide sized organization and really not have legacy.
That's happened once, didn't it? Every organisation has some sort of legacy. Even the digital neobanks have been around long enough to have legacy in their technology now. So, I mean, let's just get that out there. Some of the barriers are technological, and clearly the ability to transition to the cloud gives a level of agility that is difficult to achieve when you're in traditional on-premise platforms. However, I think far more prominent in the barriers are people and culture as opposed to technology. Okay, and that's about ways of working. It's about understanding, how you can deliver change in more agile ways. It's about attracting skills and diverse talent across the marketplace so that you can work in a certain way. And when you are a building society, as Nationwide is, you think very carefully about how you spend your members' money. It doesn't mean we always get it right, but it's incumbent on all of us to make sure that we do that in a way that is linked to the value that we're trying to add to our members. And that might mean that we take more time in certain instances to create value, particularly in an emerging market of open banking and open finance. But then when we do act, it acts with a clear value proposition. So, as I think Sam, we will be taking using PIS in payments when we allow customers to pay in when they open their accounts. We've got AI-based services on our internet banking services where you can interact both with the bot and then seamlessly transition to a human. All of these things are technologically possible, whether you've got 30, 40, even older, year-old back-end systems that the data sits in. It doesn't come without challenges, but it's more cultural than it is technological in my experience.
Yeah, and I think the important thing you're saying is maybe pick something small. Like, I mean, the PIS one that we're working on together, isn't it, is a good one in that I didn't realise that people actually opened accounts, savings accounts, cash ISAs, etc., and then didn't put any money in. I mean, so they actually go ahead and open the account, And then because of actually some of the what I call more traditional ways of linking money and putting money into that account, they never got round to that. So then you end up as a provider with all these accounts to manage and run that have no money in them. So that's no good to anyone, not good to the consumer who obviously wanted to save some money, not good to the bank to be running all these accounts without any money. So actually using that PIS in that journey to actually enable you to put the money in at the time of opening an account, it kind of solves a real world problem for everyone in that very narrow, unique situation.
Well, so pick something small that you know is going to be valuable, that you don't have to spend 5 years trying to implement because the world will have moved on by the time you've got there and it won't be valuable anymore. And then deliver that, and then learn from that and move to the next thing and the next thing and the next thing. Like the term agile is overused, misused. It means different things to different people. But I guess at the core, figuring out something small, the smallest possible thing that's valuable, and then moving on from there is what I would advise to start with. And in payments initiation services in particular, I mean, it's much hyped as being something that's going to transform the market as the alternative to cards, and it may be, but that's going to be a long old journey. And in payments initiation services for shopping online, for example, is a very when you're buying an expensive product from a online retailer, is a very different use case that has very different requirements to a bank-to-bank payment when you're opening a product. And for that to be true, you then need other things to come into play, like having the liabilities and insurances that our members would get if they were using cards, because that would then be in their best interest. And so the market's got years to evolve to solve all of these issues, but you don't need to wait for all of that before you do anything. And so I think that's at the core. Figure out what's valuable and figure out the best way to solve it. And that may be using open, or it may not be. But if you link it to the value, you'll solve it in the best, quickest, cheapest way possible.
Yeah, no, I think it's great advice. And Paul, the same. What do you think from your perspective? I mean, Mercer's is not a bank, nor is Aviva, for example, but similar issues with legacy tech.
Oh, hugely, and particularly given the business was had come together through a lot of acquisitions and mergers. There's multiple legacies, so similar problems in a similar way. I'd agree completely with Jonathan and Matt that technology, connectivity and culture were key issues to overcome. The biggest one, however, we had to overcome was an internal view that we had to build everything ourselves. And actually the realization that partnering with experts externally could get you to market quicker, could get a result quicker. And to Matt's point, it would enable you to take off a bite-sized chunk, prove the case, prove the success, and then broaden it out into the broader the business. But don't try and bite it all off at once.
No, I think that is right. So if anything we take away from today's session, it's find something that is a problem in your organization. Obviously, you solve it in the best way possible. But if open banking means it, or open finance can help you do that in a cost-effective way, then almost don't let anything stop you trying that, because you're going to benefit in the long run from that. Now, I know we're going to open up for questions, but just maybe one final, quick word of wisdom from each of you would be wonderful for our audience. Jonathan, just a little bit of insight to wrap up. Any words of wisdom?
It's always difficult to be put on the spot to say something wise. But I think if I look back over my career and what I've learned, getting stuff into market, and this maybe is a little bit of a variety on the sort of try something small, getting stuff into market and trying to sell it and trying to see how it works is the best learning experience. That's what we did with Pay It at NatWest, and that taught us a lot about how people, for instance, think about using the open banking type products for payments. So word of wisdom: try it, get it out there, see if you can sell it.
Brilliant, Matt.
Open finance is going to shape what we do probably for the next 10 years. And what's the biggest learning that I'd have perhaps from the last 5 is that there's huge potential and we should embrace it. That there possibly is role for regulation in that space. But it's far more effective for a model of innovation to have iterative commercial-led value creation, and that the two can work perhaps in harmony. But that unleashing of innovation off the back of data is what I think will allow value to flow through more quickly than perhaps we've seen over the last 5 years. And for me, the best approach to open finance is one where we can marry the two and learn from what we've done previously, but embrace it for the future.
Yeah, it was good. And final word from you, Paul?
Just an understanding that customers involving thinking needs to marry with a business's evolving thinking, because if you lose touch with what your customers are thinking you're doing, you lose your relevance to them and they'll go elsewhere.
Well, look, that's brilliant. So I think we're a fraction over on time, so we're going to wrap up quickly. But I want to thank Jonathan, Matt, and Paul very much. I personally, moderating it, enjoyed it. So I hope you two did in the audience. Thanks very much.
Thank you.